What is up, dudes and dudes? That's the Diligence here. So this morning I made a very interesting decision. I decided to double down on oil. With my limited liquidity, as you see, if you go looking at MMAT, well, you're supposed to see a green day today, but then because of the all lithium battery sort of futures in Asia was trading way too much higher, and the fact that people have no idea what exact sector is material, so it sort of suffered with a meme stock, the entire meme stock basket, and B, it suffered from all of the oil future outlook and all of the COVID scare too. But, I'm supposed to be coming out and calming you guys and be like, guys, chill, chill, chill. Everything's going to be fine. Tomorrow is most likely to be a green day, which is probably true. Like at this point, there's a 65% chance to 75% chance that tomorrow morning is going to be a green day. Because if this stock got squashed down any longer or any more, that means we'll eventually break the $3 line and it will break the entire option chain, which is it's not really breaking the entire option chain. It just the shorts itself doesn't want other people to make money. So if you look at the option chain, like a majority of open interest, who's gonna buy $10 calls? This is a yearly contract. So people are actually pretty bullish on the yearly contract. And if you see the yearly contract, you see that the most open interest put options is at $3. So if you're at the puts, you don't want the retail to really win here. So the total volume, if you're trying to play the total volume game, then you don't want it to be lower than $3. So if you are the shorts, what you want to do is you wanna further stagnatize this stock by making the stock only fluctuate in between $3 to $3.5. That means the majority of the people on the market has there's no way that they will make money using credit spreads, or they can make money by directly shorting it. So you see today the open interest or the put option for $3 is increasing. That means tomorrow I don't think it's a drop under $3. So tomorrow it will rebound. And then when tomorrow rebound, people are going to be panic and selling their puts. And then when they sell their put to close their position, the stock's going to keep dragging down again. So this is basically a reversal per se, if that makes sense. And then it's just going to fluctuate around $3 to $4. And as I expected, what's going to happen on earning day is if George doesn't have any good PR or good news in terms of future contracts or future contracts in these revenue forms, then you will see a major panic sell on right after the earnings preview or the earnings conference call. It really depends on whether George do a pre-market, post-market, or in a mid-market. In a mid-market, doubtful. You should do it on post-market, so then a lot of people's liquidity are still stranded. But if you were George, if this stock drops under $3, your butt's gonna start pinching very, very tightly, because when it drops under 2.5, this is when all the delisting calls started, and this is where where the reverse split possibility started to get to around 20 or 30% and climb above 50, then everybody else is in trouble. I know I'm supposed to come on and calm you guys, but what am I supposed to say, guys? Just hold and buy? No, hold and buy will only cause this situation. Hold and buy will only cause this situation. This situation is not what you want to see, because you actually have a vacuum zone in your option chain where people have the retail. 80% of the entire retail flow haven't anticipated the stock would drop under $40. That's why majority of the option chain are circling around $40. There's literally 0%, let's just say single-digit percent on the $30 mark. So whoever have the anticipation of buying a $30, trying to secure your position using spreads to get it to $30 as the major strike line, good for you. And you see AMC's revenue actually is not going anywhere. So the apes are in trouble. I mean, I also bought in somewhere around 33, and I bought in some of it today because I foresee a pull up the entire meme basket tomorrow. But due to the COVID fear and everything, it's just I think the COVID fear is overrated. I think everybody is just way too fearful of this COVID thing, and I think the market is gonna rebound anyways. I do think there might be a COVID surge in October because I actually did some research on Spanish flu, and I did some regression line on the entire COVID outlook and everything. If you guys are interested in seeing that kind of video, comment down below. And in my private chat with some of my friends, we were talking about Moderna, and my prediction for Moderna was $400 from the beginning. So I think, and due to my liquidity tie, I actually didn't make any plays except for buying a call at $400. So I get my paydays today a little bit, but you know, liquidity are high, so there's not really much we can really do. And tomorrow is the earning day for Moderna. And if you are really trying to see the Moderna price over $420, what you're really betting for is literally betting for you know, the earning beat for like about 38% there. But yeah, this is just what it is. And for those of you who want to see the hood update, let's just say that my loan share got an 80% increase, and I added a little bit today at the lowest point. So let's see how this works. But the justification for this, there are like multiple justifications for this, but the majority of options sitting at $60. So I don't expect it to really go surge that much. But if it goes surge, then it's great, right? Because still bought in a little bit. But yeah. Alright, see you guys on the upside. If you haven't liked this video, go like this video. If you haven't subbed, just go sub.